Hello friends, welcome back to the weekly video series in which I review the Tesla Twitter news you may have missed and get you all caught up. I call it James's Gems of the Week. My usual co-host Loki is on assignment in Damascus. So let's get right back to it. I have already brought up, let me zoom in here a little more actually. Bam, is that bigger? I can just keep doing this. There we go. So hopefully that's big enough for you to see on your screen. This is the last tweet that I covered in last week's James's Gems of the Week video. So let's just jump right into it and get moving to catch you up on the Tesla Twitter news you may have missed. So if I scroll up here a little bit, I've got a tweet from Solving the Money Problem, Stephen Mark Ryan, who many of you follow on YouTube and Twitter. True, being able to instantly broadcast to 100 million bots and a few humans is underrated. So this was in reply to a Whole Mars Catalog at Whole Mars Blog tweet. The power of Elon Musk's direct communication with his customers via Twitter is underappreciated. And at the risk of explaining the joke, Elon Musk is followed by more than 100 million people, 105.9 as of today's press date. And there is a question as to how many of them are bots being settled in court right now between Elon Musk and Twitter regarding how much he should pay, if anything, to purchase Twitter. Okay. Next, a tweet from Priyabrat Padi at Jimmy_3110. This is mine. Yeah, I think we are a bit mixed up with COGS per non-lease deliveries, or cash deliveries, as James called it, and COGS per total deliveries in this thread. So what are we talking about here? Why did I like this tweet? Well, if you scroll up to the top here, this started in my tweet thread here. So I've got a forecast review video series that at the time was all the way up to part 7 when Emmett Peppers replied, "Great chart. Should the difference in bright red below be bigger given Shanghai shut down so much in Q2 versus Q3? Can you lower the camera a few inches to show us the man bun?" There's the man bun back here. So there it is for you, Emmett. That's the question, right? That's the question that we're forecasting. So in Q1 it was low, in Q2 it was higher. What happens next from here? Well, I did go to pretty extensive effort modeling this at the site and location level and then weighting it based on my expectation for unit deliveries. But it could be wrong. It could come in lower. That's what people are saying is, hey, why wouldn't it be less than 41.5? It sure seems like it could be. If a lot of this was, one-time idle costs in Shanghai or what have you. I did load those in to my model, so I've just got the cost trending up a little bit. Now maybe I'm too aggressive on cost pressures and maybe they're not that bad. Elon has tweeted that the raw materials costs inflation isn't bad. I've seen data that the overseas shipping costs may be better, like a lot better than they were recently. So maybe the combination of those raw materials and shipping cost declines is helping to offset inflation otherwise, but we've seen real strong inflation over the last year, which I'm modeling needs to come through as increased costs. So when I replied to Emmett, I said Q3 margin should be a big improvement over Q2 one way or another. I think Tesla has a decent shot at beating my cost per vehicle forecast. So that's this number. The black bar is the cost per vehicle. The red numbers here are the revenue per vehicle, and I've got that going up by a lot. So if this number goes up and this number doesn't go up by nearly as much, then the gross margin percentage improves, right? And the next thing I said was parts 8 through 19 of my forecast review series are already available to my Patreon supporters, many of which feature my man bun. Just trying to help him find some more man bun content if that's what Emmett was looking for. So, yeah, Patreon supporters get access to my videos the day that I upload them. YouTube punishes creators for making more than one video per day public by only promoting the most recently uploaded video. So you wouldn't be seeing most of my videos if I made them all public the same day that I upload them, because I only record on weekends. Hashtag day job problems. Okay, so Priya Brat wrote me back here. Exactly, COGS per unit is a major wildcard. I think the Q2 bump was because of more Fremont share and low utilization of Shanghai rather than input costs. If true, margins might get wild. My optimistic chart of the same with his nerd emoji. So Priya Brat has COGS per unit declining significantly from Q2 to Q3, from 41 to 37. That is not what I expect. I don't expect a big drop like that. I wouldn't be surprised by a small drop. As I mentioned in my previous tweet, this is your chart or James's. I'm getting lost in the thread. That's mine. Yeah, I think we're a bit mixed up with COGS per non-leased deliveries, or cash deliveries as James called it, and COGS per total deliveries in this thread. Yeah, there's a lot of different metrics that can potentially confuse you. This one is excluding all of the leased vehicles and looking only at cash deliveries, and excludes regulatory credits. So that's what's happening here. Probably spent enough time on that tweet. Next, a tweet I liked from Brian Stoffel at Brian_Stoffel_ on Twitter. Accounting is the language of business, but it's filled with incoherent jargon. Here are 8 of the most confusing terms explained in plain English. And this got a lot of likes on it. I'll just hover over these really quickly, one at a time, and if you would like to read these tweets, it'll be easy to pause them and read them all, or you can look this up on Twitter. It'll be a real easy Twitter search for you to find. But I found this to be useful, and with a Tesla example on it as well, for property and capital. So you've got a lot of project capital cost very clearly visualized on screen here. So you've got the capital to construct this building and then to fill it with car building equipment. That's all capital expenditures that get depreciated over the life of that factory, the period of time in which it is expected to be contributing value to the company. So this was a good short thread that I liked and thought that this would be good to bring more visibility to by putting a like on it. Here's a section on goodwill. Marketable securities, not much there for a Tesla investor to worry about. Operating leases, that's confusing stuff, so some info there. So lease accounting is a little different from regular accounting. Retained earnings, if it's negative, it's a accumulated deficit, and then once it becomes a positive number, it turns into retained earnings. There you go. So that's that thread that I liked. Next, a tweet from Holmars. Just bought gas for the first time in 5 years. Forgot how bad it smells. Yeah, you forget this stuff. Like, you're hardly ever going to run into an electric vehicle owner who says, "Man, I miss pumping gas." That's not really a thing. Oh, did I accidentally hit the wrong thing? I did accidentally hit the wrong thing. All right, I'm going to scroll back down again through my likes, and we will find that Holmars blog. tweet that we were just on and continue our journey together. There it is. So there's that gas pump. The next tweet that I liked came from Jim Hall. I don't understand the draw people have to VA. The below caps from James show you all you need to know. Tesla Q in disguise, or just back to making wild statements for attention, will keep him on the block list. I find zero value added from conversations with him. So he was retweeting me. Let's see here. So this tweet is from an account you blocked. Let me view this tweet. And what Yaman Tazdoar said here at ValueAnalyst1 on Twitter, don't follow this account. In fact, block this account like I have. You'll be happier and you'll have a better Twitter experience if you do, is my opinion. These are my opinions that I'm sharing with you. I replied, true, he doesn't block me. He just explains to people citing me as a source to countering the FUD he retweets that he avoids reading anything I tweet because it's not accurate enough to meet his high standards of precision. So I save him the trouble of avoiding my content by blocking him. Let's take a look at these examples here. Well, that's going to be really hard to read. Let me back out of this. So he tweeted an article by Charlie Grant. Did I get his name right? I think I did. Elon Musk's payday could cost Tesla shareholders dearly, which is FUD. This was a FUD article. And JPR007 rightly rebuked him, saying more stuff that you don't understand. Yaman replied, being feisty, prove it wrong instead of flexing, and Simon101 at SC101_101 replied, I'm certainly no expert, but this has been a stick that Tesla bears have been running with for ages. It's been discredited over and over again. It's not new, and it's not true. Here's the latest rebuttal. And the rebuttal came from me, saying Elon Musk will be footing the bill, Charlie, as he has since the beginning. If Elon Musk succeeds in growing Tesla by greater than 10x for all shareholders as of the date he agreed to this compensation package, meaning March 2018, he will earn the right to pay Tesla $7.1 billion cash to purchase these stock options. So if you're wondering, how much does it cost Tesla shareholders? It costs 12% dilution on a stock that was 10x'd for them by the leadership of Elon Musk at the helm. And the next screenshot here is of Yaman saying, I don't read his content as it's usually biased, incomplete, and sometimes even wrong. Well, whatever you forecast, it will be wrong, Yaman Tazdoar, as I'm sure you have experienced yourself in making predictions over the years, some of which did not occur as foretold by you. I replied, some people think my insights over the years have been excellent. Retweeting Elon Musk, who tweeted, your insights over the years have been excellent. That's approximately right. To me, on August 15th, 2020. And Yaman Tazdoar replied, appeal to authority, sad. To which Larry Goldberg at Tesla Larry replied, wait, VA, your reference to Charlie Grant's article was an appeal to, help me here, what kind of authority is Charlie? And yeah, I'm not going to read the rest of that tweet, but I found it to be effective at making a point. And then there's also a news article here that I included. Tesla to join S&P 500 next month as largest ever new member. So on November 16th of 2020, the news came out that the S&P was adding Tesla to its index. In the article, Charlie claimed that because they didn't know who would be paying for the shares, that Tesla would not be granted entrance to the S&P 500. So that's that tweet. And I will back out of there and scroll on up, and we'll see the next thing that I liked. From the Short Shorts historian at Tesla Historian, I'm shocked that Matthew was wrong. at LibraB103 4 years ago. So this account has been suspended. This was Matthew Battle's account for many years, a thought and opinion leader of the Tesla Q community, Matthew Battle. His Twitter handle was easy for him to remember. It's his horoscope sign, the first letter of his last name, his shoe size, and his IQ. Okay, so what's this say? January 1st, 2019 is going to be a shock to many people who think Tesla is going to be able to sell more than a few thousand EVs a month, let alone thousands of one model. People will be shocked how low of a demand the Model 3 will see overseas. So, at the time, Tesla was selling, 150,000 Model 3s and Model Ys combined, and they have grown that number to 300,000, then to more than 400,000, and last year more than 900,000. So Matthew was wrong, so I like that tweet. Next, a tweet from Brandon Paddock at Brandon Live on Twitter. I've only discovered this account recently, but this guy is a FUD fighter, at least lately. I have followed this account. Let me click through here and show you what he's responding to. So Ruffo at GH Ruffo here tweeted, remember when a company used software to do better in tests? Thanks to Green the Only, a new case may emerge. If this is confirmed, it may be another scandal. No, it does not involve legacy automakers. All right, so the allusion that Ruffo is making here is to the Volkswagen scam, where they wrote emissions cheating software into their internal combustion engine vehicles to make them produce less emissions if they detected that they were being tested, or if they were at a testing agency site. They would reduce the level of pollution temporarily, and then once the test was over, they would go right back to emitting more pollutants into the atmosphere. So not a great analogy in the first place, but let's see what Brandon says. This is utterly irresponsible. You should know better. There is nothing to confirm at this point, only unsubstantiated speculation. Journalists of integrity investigate, then publish. Doing it backwards is not cool. Yes, there is something, Ruffo replied, that needs to be confirmed. What these ANCAP, Euro NCAP, and Korean NCAP support elements do in the code Green the Only found. Why does that code address these tests? It is highly suspicious, and you know that. I'd wait for Tesla's explanation, but ... So, bit of a snarky response here from Ruffo, to which Brandon replies, it is not highly suspicious, it's a curiosity. Some obvious, possible, and benign explanations. Number one, these agencies asked for customizations to allow their tests to be conducted, disabling checks that would interfere with certain tests. 2. Tesla uses this to exclude intentional crashes from their safety reports, NHTSA general order reporting, and so on. 3. Tesla enables special data collection during these tests, which may or may not be shared with those agencies. 4. Tesla uses this to prevent automated emergency response calls. 5. These agencies require them to disable video recording, dashcam, Sentry mode, etc. at the test sites to prevent cheating. These are just examples off the top of my head, so I thought that was a remarkable series of replies from Brandon, and I click like on one of those to remember to include it in the video. Give Brandon a follow if that looks like good FUD fighter chops for your follow list. Next, a tweet from Earl of Frunkpuppy at 28 Delays Later, which is just a GIF from The Office. So let's scroll on up here and see what's going on. So this started as a retweet from at DefNotES2 of a video with a clickbait headline on it that Tesla Herbert has since thought better of and pulled down, which is why you don't see it here. It was something about Tesla to 1 million, which isn't what Herbert said. The guest he had on his video said that not from a place of rigorous analytical support. So he poor Herbert was roundly criticized by the Tesla community for putting out any kind of expectation that Tesla's share price will one day be $1 million, which would require more money going into Tesla stock ownership than currently exists in the world, I think. So Earl replied, "It's deleted. I hope you're happy." DefNaughtyS2 replied, "Yeah, the more of these posts, the longer we wait for a new bull," meaning a new bull market, because the era of irrational exuberance continues until the irrationally exuberant get wiped out. Is the point there? I saved it for you. Oh, here it is. So the guest in question was Joe Justice, who claimed Tesla would eventually be worth $1 million per share. So there's the facepalm from Earl. His show went downhill since I was on it. To which I replied, "I was on after you. Hey, wait a minute." So that's where this tweet came from that I liked. All right. Next, a tweet from Alexandra Mertz at Tesla Boomer Mama on Twitter. "Completely agree, James. That's why I applied the 1.1 limit rather than the 1.8 limit for manufacturers and added the other ratios, and still it's way better than the credit ratings." So this is a reply in a thread from Kathy Kitchler at Kathy Kitchler on Twitter. "Altman Z-score, does it work as a good measurement of a company's financial health regardless of economic sector? Insurance, diversified financials, utilities, mining, etc. Do you note any exceptions?" And I replied, "Yes, the exception is banks or companies who act like banks by loaning money. Altman Z-score is not recommended for evaluating companies operating under that business model." Why is that any different? It's different if you're borrowing money to invest in your business as opposed to borrowing money against collateral. If there's collateral that you can repossess and sell, that debt is better than purely just taking loans to invest into your company's general purposes, right? So this makes it difficult to judge manufacturers such as GM, which owns Ally Bank, and Ford, which owns Ford Credit. Those are their captive financing arms, and that's where this reply came in. The next tweet that I liked came from Alex at AJ Tourville on Twitter. "Human drivers are responsible for 40,000 deaths, millions of injuries, and $475 billion in accident-related costs per year in the U.S. alone. Tesla engineers are striving to deliver a self-driving car that is 10 plus times safer than a human driver." So this GIF shows a human driver who could have killed this cyclist. As you see at the end of this video, the cyclist gets up unharmed, shockingly, after being struck by a faster-moving station wagon under the control of a human driver who just plowed right into him. So that was a good tweet that I liked, and 1,000 other people did as well. And I did it again. I clicked back when I should have just clicked up. So back we go to my likes and down the list, and we'll find that GIF without too much trouble, I think. Here it is. So the next tweet that I liked came from Every Elon Like and Reply at Every Elon Reply on Twitter. You can follow this account, and it will give you notifications if you turn your notifications on for this account for every time Elon Musk replies to someone or likes a tweet. And in this case, the tweet that Elon liked came from me, James Stevenson. "If only we wanted to be happy, it would be easy. But we want to be happier than other people, which is difficult, since we think them happier than they are." A quote by Montesquieu, which I've probably mispronounced, sadly. So this was a thread started by Austin Allred at Austin, The world is not driven by greed, it's driven by envy. A quote from Charlie Munger, who you see here, who still works at Berkshire Hathaway, Warren Buffett's company. They've been friends and business partners for many decades. And Elon replied, Instagram is an envy amplifier. So my tweet was meant just to illustrate, hey, a guy over 200 years ago was making an observation about the human condition similar to what we see today from an Instagram application that people have only had for 10 years or so. It is a human frailty and failing that people are envious of the happiness other people have, which may be illusory. So before I wax too eloquent, I will continue to the next tweet. The Shorts historian at Tesla Historian again, with another This Day in Tesla Q history. Should have listened to your comrades at Jurabilis 3 years ago. So this tweet says, I seem to be surrounded by comrades seriously thinking about covering, meaning covering their short positions against Tesla. Sad. Hashtag Tesla Q from September 11th, 2019, which is located here on a Tesla stock price chart. This was the 5-year low back here on June the 3rd of 2019. So Jurabilis was disappointed that anybody would cover their short position here before Tesla reported the Q3 deliveries numbers in 2019, which were way better than the Q1 and Q2 delivery numbers and kicked off the beginning of this upward climb in market capitalization for Tesla. Okay, next a tweet from Brody Wolstenholme at Bro Wolstenholme on Twitter, tagging student Mark Ryan and me and Dave Lee. Saw this morning and thought it explains the current OEM behavior perfectly. So here's a market share chart declining with some people looking at the boss. You can tell this is the boss because he's wearing the blue coat with the red striped tie. If we can't beat them, copy them, but not as well and later to market. That is the strategy being employed by GM and Ford, in my opinion. Others' opinions will differ. Okay. Next, a tweet from Mayor Thaker at FreshJiva on Twitter. 15, not 3, smiley face. What's this talking about? Dave asked, whenever you see Tesla stock price, who is still multiplying it by 3 to get old stock price? So, I think Dave bought his Tesla shares before either Mayor or I bought ours. I started buying in 2014. I think Dave was in before 2014 by a few years, which was a great move on his part. So I replied, this is the way. Multiply by 15 because we bought our shares before both of the stock splits, the 5-for-1 and the 13, the 5-for-1 and the 3-for-1, which combined mean you should multiply today's share price by 15 to see what it would have been without both stock splits. All right, next tweet from Elon Musk. Yes, replying to me and Ilya Sut. So what was in this thread? Ilya Sutskever started the thread, seeing reality as it is and not the way we want it to be is hard work, actually. Elon replied, our view of reality is always wrong, just a question of how wrong. To which I replied, so the goal is to be less wrong, which if you followed Elon for a long time, you know he says on a routine basis when he's on this topic. So I wanted to help him complete his thought here. So that was that thread. Next, a tweet from Tesla Herbert at Tesla Herbert on Twitter. These are the questions I've been asking recently. I've been wanting to know the answers, and now I do. Thank you, James. So he was retweeting part 13 from my forecast review series, where I go over the cost of sales percents that I'm forecasting for every Tesla product by quarter going forward. Next, a tweet from Emmett Peppers. Good philosophy I think of a lot is to focus on progress, not perfection. Similar to the famous quote, perfect is the enemy of good. Yes, if you wait to ship your product until it's perfect, you will never ship your product. So, perfect is the enemy of good. If you've got a good enough product, ship it. And then continue working on making it better, and you can release better products in the future, right? Especially in the age of software, when you can do over-the-air software updates, ship it, and fix it later. If it's good enough, ship it. Carsonite, at Carsonite on Twitter, tweeted all Powerwall and Megapack production is being moved to Lathrop, California. Tesla Energy is at the same stage the Model 3 was in 2017. Growth will be exponential. Rather, the new factory will produce 30 gigawatt hours per year. Now, I know we're not all used to seeing these numbers, but this is a big number for battery cell production, making it one of the highest production battery facilities on Earth. A Tesla factory in California that not a lot of people even know exists. So the Megapack product is literally shipping containers full of batteries that act as a utility scale solution for battery storage. Retweeting James Catt here at TeslaFanMTL, I think Tesla Energy to break $1 billion this quarter with a positive gross margin. Exciting times. Hashtag Tesla. The next tweet that I liked came from K10 at Kristen Netton on Twitter. Well, that's the problem with hydrogen. Boom. So Walter Bloomberg is who she's retweeting here at Delta One. Schultz says, hydrogen is the gas of the future. We will create a huge boom. So an extremely poor turn of phrase on this tweet, which Christian called attention to and got a like from me and a lot of other people. Next, a tweet from Martin Vieca, the Vice President of Investor Relations at Tesla, at Martin Vieca on Twitter, with the first of several tweets that I liked from him this week. He's on fire lately with good tweets. Some people say, I don't need a new car. My 14-year-old Volvo, for example, works just fine. Please watch this video. Vehicle safety changes beyond recognition in a 14-year time frame. So in 2009, the Institute for Highway Safety staged a head-on crash between a 2009 Chevy Malibu and a 1959 Bel Air. The same crash that would have instantly killed someone in 1959 causes a few light injuries today. So I'll just let this GIF play back through again. To the end, and you can see the 2009 Chevy Malibu did great. The 1959 Bel Air would definitely have killed its driver in this crash. Same crash, same force of impact in the middle, but just devastating G-forces and sudden stops inside this Bel Air. There's the shot that we're looking for. So, yeah. That's a great tweet from Martin. The next tweet that I liked came from Elon Musk. This was harder than reaching volume production, which was insanely hard. What was? Tesla has reduced the cost of manufacturing its cars by 57% since 2017. So there's an article from Tasmanian you can go check out to see what Elon was replying to. Next, a tweet I liked from Elon's brother Kimball, at Kimball on Twitter. Strange women, lying in ponds, distributing swords is no basis for a system of government. I know he said form of government here, but the actual quote is system. I committed Monty Python and the Holy Grail to memory as a a child in the misspent days of my youth. To which Elon replied, could be worse. And I replied with the Black Knight scene, come on, you pansy. But the rest of this quote is right here. I guess I should finish the quote. Supreme executive power derives from a mandate from the masses, not from some farcical aquatic ceremony. I mean, if I went round saying I was emperor just because some moistened bint had lobbed a scimitar at me, they'd put me away. With apologies to Michael Palin. All right. So where's the next tweet that I liked? It was that one. Oh, and then Elon took that same GIF. Help, 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 I'm being repressed. Go watch Monty Python and the Holy Grail right now if you haven't before. This is the kind of comedy you can't see anymore because it doesn't get made. All right, next a tweet from Septimus Claudius Nero's Legion at @st7. About these and other huge Twitter problems, Elon Musk didn't know when he made his offer. He based his proposal on SEC filings and public statements of the company, but as Zatko stated, the company's executives misled investors, board, and users. So who's Zatko? Zatko used to work at Twitter, head of information technology, security, those types of areas, and blew the whistle on lots of things Twitter was doing and hiding from the public that you can read about in this thread. I want to make sure I get through all of my tweets for the week, so I will let you look this up on your own to go read through if you're interested in that topic. The next tweet from Martin that I liked: in the auto industry, low-cost and low-capex manufacturing might be the most difficult thing for anyone to replicate. So I like that tweet, and I replied to it with this visual aid, and I put the graphic courtesy link here. This visual aid came from Martin Vieca, so this was in the Q1 Tesla earnings release. So this red line, as you might suspect, is the Tesla line with 0 here. So you can tell that Tesla's GAAP operating margin over the 12 trailing months, which is the GAAP profit divided by the revenue, was a negative number because Tesla was losing money on a GAAP basis for the 12 trailing months ended Q4 2018, back here, when Tesla Q had a point about Tesla still losing money back then. They were wrong about Tesla being structurally unprofitable. If you've got a few spare hours, search Twitter for structurally unprofitable, and you'll find all the old Tesla Q tweets saying that Tesla could never make money, right? So what's happened since then? Well, Tesla's GAAP profits have increased by a lot as a percentage of revenue. How much? To the point that Tesla's profits are now more than these other automakers listed above, all the gray lines, have been making over the past 3 years, right? These are unprecedented high GAAP operating margins. On a GAAP basis, Tesla now makes more than 12%, and none of the competition does. So that's the chart that I thought best illustrated the point Martin was making here. I'll head back. The next tweet that I liked came from Stephen Mark Ryan. True, hashtag Tesla content is growing about as fast as Tesla is. Replying to a thread that I should start from the top here. Farzad Misbahi, or Farzad if you want to pronounce it correctly, at Farziness. Over under Tesla, 33% auto gross margins excluding ZEV credits in Q3 2022. So he's asking, do you think the automotive gross margin excluding ZEV credits will be more or less than 33%? So most people took the over. I took the under. You see my check mark here indicates this was my vote. And then I replied with under and my nerd emoji, retweeting my own forecast here, where you can see my automotive gross margin, excluding regulatory credits percent, forecast for Q3 of 2022 is only 28.9%, and only 31.4% in Q4. Can Tesla beat these numbers? Sure. Yeah, they definitely can, but it's not my expectation that they will beat 33% until next year, and then next year they're going to do it every quarter, is what I'm forecasting. So Matt Smith at MattChasmMatt replied, I'm taking the over, with the bull here indicating his bullishness on the topic. And I replied with the popcorn emoji and the dodgeball gif. That's a bold strategy, Cotton. Let's see if it pays off for him. From just the worst sports commentator in history. Just delightfully executed movie, Dodgeball. Go see Dodgeball, too. That's also on your viewing list now. How are you going to watch all this YouTube content if you have to keep watching my movie recommendations for comedies? So Matt replied, ha, took a lot of thinking to get there, but I'm just over 34% right now, and I think it's actually pretty sound. We'll see, with the Dwight Schrute from The Office gif here. GIF game pretty strong in this thread. And I asked, so what do you think my assumptions are way off on? And Matt said, well, this is embarrassing, but I still have your videos bookmarked, but I haven't watched them yet. If I had to guess, it would be COGS per vehicle. I'm assuming a slight increase relative to Q1, which is a pretty big drop relative to Q2. So yeah, that's definitely it, because I am not expecting a big drop from Q2 anywhere near Q1 levels. We're in a very inflationary period right now, so the costs, there ought to be some cost pressures flowing through. And I tweeted the one that Stephen Mark Ryan replied to, there's really too much good Tesla content on YouTube right now for anyone with a day job, like this guy, to be able to watch it all. So, yeah, Stephen Mark Ryan, content growing about as fast as Tesla is. All right, so what's the next tweet that I liked? One from Elon Musk here, beta expanding to safety scores above 80 after 10.69.2.1 goes out. 10.69.2.1 coming out in a few days with additional polish. 10.69.3 comes out shortly after AI Day. So the question here is, what I replied, that's probably a lot of the US Tesla fleet getting FSD beta features delivered for the first time, which would earn a lot of previously deferred revenue. I think I'm going to have to raise my Q4 shortly after September 30th AI Day earnings forecast, with the exhibit, the visual aid here being the AI Day announcement that it's going to be September 30th in Palo Alto, California, for those who can attend in person. And somebody asked me, yeah, here it is. Why will pushing out FSD beta affect revenue? Aren't they already paid? And I replied to that, Tesla has been paid and taken the cash onto their balance sheet, but they have not taken all of the revenue onto the income statement yet, because they have not earned all of the revenue by delivering all of the features buyers paid for. Some of the full self-driving portion of the revenue was deferred as an unearned revenue liability, which you can see on Tesla's 10Qs or 10Ks. If you go check it out, it's part of the unearned revenue liability. There is other unearned revenue besides full self-driving, but that sets a limit on how much it could possibly be, if you're interested in that. And do I have to hit back one more time? Yeah, I do. To get to the next tweet that I liked from David Lim at lim_David on Twitter. It even states this on their website, link here, nhtsa.gov/laws, etc. And let's look at this exhibit where the website says it's important to note that these crashes are categorized based on what driving automation system was reported as being equipped on the vehicle, not on what system was reported to be engaged at the time of the incident. This is a really important distinction being missed by, let me click on here and see who he's replying to. Taylor Ogan, at Taylor Ogan on Twitter. So here's a Tesla hater who puts out a lot of FUD on Twitter on a daily basis. The NHTSA SGO data through July just came out. There were a record number of fatal Tesla crashes on ADAS in July. So, 3. Now, I would not make light of any human tragedy on this channel, but 40,000 people die in traffic accidents in the U.S. alone, yearly, and that's been true for a long time. So over the past 20 years, more Americans have died in traffic accidents than died in World Wars I and II combined. So to highlight a number of 3 in this FUD is irresponsible in the first place. But David's first reply here was, "Stop spreading misinformation, Taylor. The NHTSA SGO report doesn't state whether a crash occurred with the ADAS engaged/activated. This is stated on page 5 of their June 2022 report. See PIC. Link here for those interested." So good work by David. So I like that tweet. Happy to feature that in James's Gems of the Week. That's a good gem. Next, a tweet from James Hatfield at _James Hatfield _ on Twitter. Where's James' chart showing why Tesla will Q? Q being shorthand for go bankrupt. Replying to Earl of Frunkpuppy, long wait times are bad for Tesla, and also shorter wait times are bad for Tesla. Real full/empty parking lots vibe. Hashtag Tesla. So then he found it. So this is my Tesla Q logic flow chart that I've been tweeting out for years now on Twitter to illustrate the flaw in Tesla Q logic, that not producing enough cars and producing too many cars are both viewed as being bad, with the conclusion being Tesla is doomed by the Tesla Q community. If there are too many cars in parking lots, or if there are not enough cars in parking lots, both of those mean that Tesla is doomed, because that's bad, etc. Next tweet that I liked came from Alexandra. Ne sais pas. Same when Madame pulls out words in French, much more classy. Much more classy, ne sais pas. French for don't know. I think je ne sais pas is I don't know. So ne sais pas. The 1.1 limit from Altman's historic z-score, which we saw in the earlier tweet from Alexandra, then revised it for manufacturing up to 1.8, so I did not pull it completely out of my hat. What are we talking about here? This started with a tweet from me saying, for those of you not watching my Tesla earnings forecast review videos on YouTube, here's a sample of what you're missing, with a little audio clip here that you can listen to if you'd like. I said if you need a testimonial, check out my latest YouTube channel stats. 11,000 subscribers, can't be wrong. So my channel stats are looking okay. Bradford replied, at Brad S. Ferguson on Twitter, James, you are more than the usual, with sticking out a tongue, keyboard emoji there. Kathy Kitchler replied, I cannot get enough of the explanation videos. Finance professors should assign them. Any deep thoughts about how to design an Altman z-score for financial firms? Stevenson's z-score has a ring to it, and James' z-score sounds good too. Or Bradford James score. Bradford has a metric named after him already, which you can look up and find more info about online. Alexandra so I replied saying Alexandra lowered the distress zone threshold from 1.8 to 1.1, to which he said, admittedly, that's not very academic. I said it somehow seems more scientific at 1.1 than it would have at 1.0. So that's where that tweet came from that I liked. The next tweet from Alexandra, it's related to real debt versus lending debt, especially when secured by assets, which brings up the whole subject. How much will these lease/finance cars be worth when they come back to the lender? all the leased ones and defaulted financed ones, not easy to quantify. So if the collateral assets are depreciating in value, and if they depreciate unexpectedly more than they have trended in the past on average, and if that was unexpected, and if these result in defaults, then the lender won't be able to recover as much value as they need upon selling those assets on the open market that they repossess. It's kind of the complicated context that I would tack onto that comment. The next tweets that I liked came from Jason DeBolt and Sawyer Merritt, at Jason DeBolt and at Sawyer Merritt on Twitter. I've submitted my identification to Twitter to remove imposter accounts probably 20 times. Just verify me and the other accounts with over 1,000 followers and be done with it already. Sawyer said, I've submitted my license over 100 times to Twitter in the last 2 years to take down impersonators. More always pop up anyways. So he was replying to Edgar Durao. Sawyer Merritt was complaining about it too today. The process is currently very poor, it seems. I had replied to Jason, or anyone who's had to submit their driver's license more than 5 times to get impersonators suspended, with a can I get an amen Will Ferrell gif here. So yeah, when people impersonate us, Jason, Sawyer, me, lots of other people, they block us on Twitter, so we can't see them. We have to have our followers report them to us so that we can report them. And you have to type in their handle and then click the link to get through it because they've blocked you to even be able to get to their page to be able to report them. And then when you do, Tesla sends you an email in an hour that you have to go check, follow a link, upload your driver's license ID photo info to Twitter to prove that you're the real account and they're the imposter. And then in the next day or so, they suspend the account. That's how that works. So it's kind of a really clunky process that's aggravating to have to go through dozens of times as you keep getting impersonated by people who are trying to rip off your followers via DM when people aren't diligent enough in double checking to make sure that they are talking to the real account. Check the followers count if you're concerned that you might not be talking to the right person, and check the handle carefully. All right. So I did it again. So back we go. I think I'm close to the top now. Yeah, here we are already. So we're very close to the end of the video now. With another tweet from Martin Vieca. Had a close call today. This is from Martin's own Tesla. Always a reminder of why I want to be sitting in a Tesla. So watch that truck. You see the brake lights, and it comes right across. Wow. So that could have been a traffic accident for sure. So a good tweet there from Martin. And the last tweet in James's Gems of the Week for this week comes from Tesla historian again. Thanks for the great pro tips, Marshmallow Peep 4 years ago. Replying to Elon Musk, who said, sorry, we've gone through production hell to delivery logistics hell, but this problem is far more tractable. We're making rapid progress, should be solved shortly. Then Marshmallow Peep, a longtime Tesla hater, replied, pro tip, you shouldn't use the word should when dealing with a customer. It shows weakness. Another pro tip, declare bankruptcy now while you can still do it with some dignity. Hashtag Tesla Q. On September 17th, 2018. So, thought that was a good tweet to remind people these are the same accounts that have been, saying that Tesla was going bankrupt and that they were overvalued when the company was at a market cap below $100 billion, like way below, back here in 2018 and 2019. These are the same accounts who today are telling you that Tesla is overvalued at these prices, right? So with that, we have reached the end of James's Gems of the Week. So if you've enjoyed today's video, click the like button. If you're not subscribed to my channel, you could go ahead and subscribe to my channel. And your other options are to support my channel by doing more than just watching my videos and clicking like and subscribe. You could go to Patreon, check that out. My Patreon subscribers all get access to videos the day that I upload them instead of having to wait for me to publish them publicly later. Or you could join my channel if you want. That feature just became available to me on YouTube, so if you'd prefer to support me that way, you can. And I will see you in the next one.